Boom! What's going on, guys? Welcome into your Energy News Beat, episode number 157, here on this gorgeous Wednesday, November 11th, 2020. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, oilandgas360.com, Stuart Turley. It's 11/11. Make a wish, Stu. What do you got?
It's a beautiful day in the neighborhood, and we'd like to have Saudi Aramco sponsor this. So, that'd be kind of fun.
That's a great wish, actually. We'd love that ad running through our TAC. But in the meantime, we'll take you guys subscribing to our podcast and our show here on this YouTube channel. Search Oil and Gas 360 and come on YouTube. Subscribe. Do whatever makes the algorithms know. It's really appreciate it. I'd be remiss to say Happy Veterans Day to all of our veterans that are listening to the show today. We really appreciate all of your guys' fighting for freedom. I mean, honestly, you're doing great work, so we really appreciate all of that. Stu's got, honestly, a crazy day on the international news as he's got 4 stories, starting off with some Norway. We love our friends there. China's just all over the place in Australia. Couple stories on the oil and gas U.S. news side. EQT CEO's got some interesting comments. We'll dissect crude oil inventories out. Nasdaq was up big today. We'll cover all that, guys. But as I mentioned, just subscribe on YouTube here. We really appreciate it. As we look at, as I mentioned, the equities markets, tech stock lead the way today, mostly because they've been down over the past 2 sessions with this new Pittsburgh coronavirus vaccine. Remember, during lockdown, tech stocks boom. Apple was up, Zoom was up, because everyone's online shopping, Netflixing, and calling there and having Zoom hangouts. So when the tables flipped, and now all of a sudden people might start going back and moving out and starting to drive a little bit, those tech stocks are going to depreciate a little bit. The sentiment on the street was the reason why you're seeing Nasdaq up 2 percentage points today, but SPY only up 0.5 percentage point. Dow Jones actually lost about 0.3 percentage point, just because investors are looking. Nasdaq is the high growth stocks. If you can buy it a little, a suboptimal price, expecting it inflating a little bit. So there's just a lot of buying on the institutional side after seeing some of those 2 days of depressed pricing. That's why I think you see the despair in the indices. Moving over to the crude oil side, I don't get this market, Stu. 41.48 up again. We saw $43 early in the trading session. I mean, some of the numbers, Libya's over 1 million barrels. Global oil stocks are at an all-time demand. I'm looking at a chart here, Stu. For the 6 to 8 day, gasoline demand has fallen, showing demand down 5% from last Monday. Yet we're just all of these bearish fundamentals. Yet, boom, off vaccine news, crude oil up. I can't say I don't like it, being an oil and gas guy. It just confuses me. I don't, if you come here looking for an answer, I don't know if I actually have one for you, unfortunately, other than better get in on this bull side of this market, because markets seem to be inflating back into the curve. 0.3 percentage point, 43.38. Natural gas, it's up above $3 finally. 302 up 2.5 percentage points. Maybe some colder weather, probably an expected stock draws, what kind of drove those prices up. XOP was down 1% today, but about up 15% week over week. So that's a good number for our XOP. OIH was down 3 percentage points today. And we look at our individual equity starting on the downside. PBF Energy was down big today. Ultra Participation down 5 percentage points. Sundance was down big. High Point Resources, as we know, they're moving over to Bonanza Creek. They're down a little bit. On the upside, some good numbers. Silverbow, they're up 7 percentage points. Peabody, after being down huge yesterday, little swing back up 8 percentage points. Permanent Royalty Trust, they're up 11 percentage points. And Telrinian Midstream, they're up 12 percentage points. Before we dive in to the international news desk, guys, I need to tell you about our friends. And this show is powered by Data Gumbo, which is an award-winning technology and company with customers all around the world who build and manage and automate their own smart contracts. These smart contracts offer a new approach to commercial relationships, one that reduces friction, delivers streamlined operations, transactional certainty, and cost savings. Every transaction is accurate, secure, touchless, and automated by GumboNet, which is on the blockchain. You can't be scared of blockchain anymore, people. It's here. It's secure. It's rock solid. Check out everything blockchain, datagumbo.com, or in the link if you're watching this on Closing Bell. Check out our article on LOE analysis. Stu, it's your show today. Really, what's on the international news desk?
Oh, Michael, hang on. We're going around the world. And
buckle up, buckaroos.
Okay, wildcat drilling at its best. You can't buy this kind of fun. We love our folks over in Norway and gas discovery southwest of the Sarv field in the Norwegian Sea.
That's ConocoPhillips, right?
Yes, it is. And in fact, the well was drilled 27 kilometers southwest of the scar field in the central part of the sea. Now, here we are with my, I thought the Leif Erikson is the gigantic rig. It's 19 years old. I thought it was a rock star when I was reading this, because when I was growing up, Leif Erikson was a rock star. This thing,
the most Norwegian name for a rig. I asked Stu this morning. I was like, what do we think the rig's name? And he was very close to getting it. It was pretty funny.
Now, the funny thing is, we actually ran a story on this, I believe in October, and it was coming in. Just a nugget on this, Michael. The well was drilled at a depth of 4,960 meters below sea level, and it was terminated in the early Cretaceous age. You ought to know that. You're in mines.
Cretaceous?
Thank you. Cretaceous. That's a Texas way to talk.
I was about to say, you're not from Texas or anything.
Oh, no. Hey, but anyway, I thought that was all pretty interesting. Here's our technical map. So if anybody wants to invest in it, there it is. Okay. We are going around the corner here, and we're off to OPEC again. The horses are turning the corner, and we're always talking about OPEC, but I thought that, Michael, this was kind of a funny nugget. They are saying now today, we need a ticker going across their daily demand on our show. So if you can figure that out.
We do need to figure that out, because it's literally changing every single day.
It is. They're now saying demand will rise by 6.25 million barrels per day in next year to 96.26 million barrels per day. All righty then. So here's some other nuggets in here that we kind of go. The demand for oil recovery will be severely hampered and sluggish. Really? Oil has risen this week over $45, which we've talked about. But OPEC says its output will be driven by next summer, but it's not sure about Libya. Okay.
Not sure about Libya. Good one.
Okay. I just really got tickled at that one when they're trying to, we're on to the next one here. Why are they coming out with a number every day?
Well, I think the problem is they have to, with all this new data that's coming out, with a possible vaccine, with now Libya coming out and basically telling everybody they're breaking the rules. I think they have to try to feel like they're updated with what's going on in the market. I mean, if they still said demand was, 110 million barrels a day, people would know they're lying to you. It's not trustworthy. So I think they're just you're caught in this weird realm. If you want to get into the data space, you have to take the time to make sure your data is accurate every single time you put it out there. It's why I would never want to be in the data space, providing data as a service. Woo-hoo! That's too much work.
Michael, that's like being relevant, trying to remain relevant. When I was in college, I tried to remain relevant with the women, and it didn't work. Okay, now we are going on to Australia, so hang on. China has put an embargo on Australian coking coal, which is used in the steel. And what that means is the price and sourcing for coking coal for China is tough. It's bad for Australia because they're really not going to, they have to go find the other markets. But here's the nugget for you, Michael. And that is, here we are with our beautiful graphics got a big dump truck. The thing is that it's going to really change the pricing for all of the metal made in China for their contracts and shipbuilding. Pretty crazy, something to watch on that. So here we go. We're done with Australia. Now we're back to China. So I hope your arms aren't tired yet. But we take a look at the U.S. to China trade in this article. Trade volume up, which is good, but far short of the target goals. Energy exports down 21.7%. Couple nuggets on why. They hate us. Just kidding. The energy goods are being replaced a lot by the Russian imports from the North Pole, from the glacier area and everything else. So we're losing money out on the energy exports. So anyway, thought that was an interesting nugget. So wild day on the news desk.
Well, yeah, because China's all over the place. I think this discovery in Norway's a decent deal. I mean, you're going to continue to see, no one's announcing news of big onshore U.S. discoveries anymore. Why? Because investors don't care about it. This is something that could draw some equity money into it. So that's a story we'll be following. As we shift over to the U.S. side, really like today. Two things that I've got, a couple little nuggets I want to drop. First, we've got crude oil stocks down 8.2 million barrels today. It's one of the few bullish signs right now that is in oil and gas. I think, if we're talking about a crude oil, I think if you kind of put them in a column, I think this is one of them. This is outside of the vaccine, this is about the only other bullish fundamental you have. I think we've done a good job of covering what's on the other side of this. Some other numbers: domestic production was down about 600,000 barrels to 10.5 million. Refinery utilization almost dips below 75, but we get saved 75.3, which is definitely a good number when talking about how much of, we talk about gasoline demand is down. Next week that number's not going to, it's going to be below 75, and that's a pretty wildly bearish number. Really the only other thing that I saw that is I think we're all going to get a crack out of this, people. EQT, Toby Rice, CEO, came out and he basically had an interview today and dropped two nuggets. One is that they're not done yet. They're not done on the M&A side after their $735 million acquisition. To give you a quote from him, "We are firm believers that consolidation is going to be the next step in change in value creation for our shareholders." Interesting. What did it used to be? Production growth. What did everyone for the past 10 years want? Production growth. That's where our value for investors are going to be. Well, now you're seeing the opposite. And to be honest with you, I don't know if I agree with that statement. It might make the largest investors money, but I don't think it will make the average equity shareholder more. I don't necessarily fully agree with that statement. Do I think that's where the industry has to go because of the debt situation? I think,
yep.
I think Scott Sheffield has the same opinion, but he has different reasons. And I tend to believe with those reasons more, that is, too many companies with too much debt and too little cash on hand to sustain. That's driving the M&A. Not that there's any value being created for the investors. I mean, this was written by a slick PR guy, but because I just don't buy the quote. It's not because there's any value. It's you're buying assets for 10 cents on the dollar that probably should have been valued at that 10 cents when they were originally spun up. So we'll agree to disagree with that, but we do think more M&A is coming. And, who knows if they'll get in, so remember they're interested in about 2.2 billion for CNX. I actually saw a really interesting article today about CNX assets. They have some, there could be some trouble in River City with the evaluation going on of their assets. So that's a story we'll be following. A couple other nuggets here. I saw this on Twitter today, Stu. San Francisco just banned natural gas on new constructions. Holy smokes. That's funny to me. It couldn't have happened. It couldn't happen to a better city. Couldn't happen to a better city. Let's cut off the lowest possible kilowatt hour and let's get them all on wind. I can't wait. We'll start shipping in hamsters and hamster wheels, and we'll get some of these on. We'll get some of these new buildings on hamster wheels. I think that's what we're gonna go to. No, natural gas. I'm not joking, people. I'm not joking. San Francisco just banned natural gas lines on all new construction. So instead of being $95,000 a month for a one-bedroom studio, it'll now cost you $104,000 a month. So it cracks me up. We also mentioned we also mentioned gasoline demand down for 6 days. It's just all these fundamentals on crude oil are absolutely killing me, Stu. I can't figure out which way. If you're day trading crude oil right now, say that'd be good for you. Call me up. I could use some tips. Stu, we forgetting anything?
No, I just can't believe you're sitting here talking about gerbils and trying to put them on trading.
Keep the lights on in San Francisco. It's gerbils and cheese. If you're paying natural gas, I don't know where else you're going to go. We'll definitely be watching this one. But with that, guys, we're going to go ahead and get out of here, let you get back to work, finish up your day. Thank you for checking us out here on your Energy News Beat via the world's greatest website, oilandgas360.com. For Stuart Turley, I'm Michael Tanner. We will see you guys tomorrow for another episode.